Can an LLC own a C corporation? The answer is yes, but this ownership structure comes with important legal and tax implications that business owners need to understand. When it comes to business entities, LLCs and corporations represent two distinct legal structures, each with their own characteristics. A limited liability company, or LLC, provides liability protection while offering tax flexibility. A C corporation is the standard corporate structure that can have unlimited shareholders and is taxed at the corporate level. Let's clarify an important distinction right away. While an LLC can own a C corporation, it cannot own an S corporation. This is because S corporations have strict ownership requirements under IRS rules, limiting shareholders to individuals rather than business entities. C corporations, on the other hand, can be owned by other businesses, including LLCs. Any corporation is automatically formed as a C corporation. To become an S corporation, owners must file Form 2553 with the IRS to elect this special tax status. This distinction is crucial because it determines who can own shares in the company. When an LLC owns a C corporation, there are significant tax considerations to keep in mind. The most notable is the potential for double taxation. First, the C corporation pays corporate income tax on its profits. Then, when dividends are distributed to the LLC, those profits are taxed again at the LLC member level. This creates two layers of taxation on the same income. A strategic approach to minimize this tax burden might involve reinvesting profits within the C corporation rather than distributing them as dividends. This allows the business to grow while deferring additional taxation. From a legal perspective, even if an LLC owns 100% of a C corporation, the corporation must still maintain its corporate governance structure. This means having a board of directors, officers, and complying with corporate bylaws. The LLC will need to appoint individuals to fulfill these corporate roles, such as president or secretary, since corporate law requires actual people to manage corporate affairs. State regulations also play a role in this ownership structure. Different states may have specific requirements for LLCs owning corporations, including additional licensing or filing obligations. Both entities must separately comply with annual reporting requirements and pay their respective taxes. Why might an LLC choose to own a C corporation, despite these complexities? There are several strategic reasons. First, it can be an effective investment strategy, allowing the LLC to benefit from potential equity growth in the corporation. Second, it facilitates business expansion while maintaining separate liability protection for different operations. Third, C corporations can attract certain investors through multiple classes of stock and venture capital opportunities that aren't available to LLCs. Understanding the key differences between these entities helps in determining the optimal structure. LLCs are owned by members who can be individuals or entities, while C corporations have shareholders. LLCs typically have pass-through taxation by default, whereas C corporations face corporate taxation. Management structures also differ significantly, with LLCs offering more flexibility compared to the rigid board and officer requirements of corporations. When an LLC considers acquiring a corporation, it has two main options: purchasing the corporate stock or buying the assets. Asset purchases often provide tax advantages and help avoid inheriting corporate liabilities, but this decision should be made with professional guidance. For businesses contemplating this ownership structure, several practical questions arise. Yes, an LLC can be the sole owner of a C corporation. Yes, an LLC can own multiple C corporations, creating a holding company structure. And yes, this arrangement can provide additional liability protection, though maintaining proper corporate formalities is essential to preserve this benefit. The decision to have an LLC own a C corporation should be based on your specific business goals, investment needs, and tax strategy. While this structure offers benefits like liability protection, business flexibility, and investment opportunities, it also comes with challenges including double taxation and increased compliance requirements. Consulting with legal and tax professionals is essential to navigate these complexities and determine if this ownership structure aligns with your business objectives.